Hello, everyone, and welcome to the Pot of Gold podcast, where we talk about finances, wealth generation, and real estate investing. I'm your host, Nathaniel Opoulos, and today we're just going to kind of go over a little bit about what we've been talking about. We went over in the last few episodes some of my learning about negative net zero mindsets and how I learned that it's important to pay yourself first. Then after that episode, I had an interview with Max Valdez with Max Cash Flows. He works for the Playbook, and Max is a fellow Gator lender who helps real estate wholesalers by joint venturing to provide earnest money deposit funding and double closes. And that was a really good conversation that we were able to have with him about some of those things. Today, I'm going to tell you more about my story and maybe talk about some of the books that have influenced my financial education as things have gone on. I'm going to go over the 4 sources of income generation, the importance of understanding assets and liabilities, and then I'm going to talk a little bit about debt. And now most people are familiar with bad debt. I'm going to go into what that entails and a little bit about what's considered good debt. And so I guess I'd go back to I'd say about 2019 or so. We were looking to get a house for the first time, and I'd started looking into real estate as an investment vehicle because I was curious about what I was going to do with the money that I was starting to put away with Pay Yourself First. The big idea was to start increasing my ability to save better because we needed to figure out a way to buy a house. We still haven't made it that far because I was about $4,000, $5,000 short of what I wanted for a good down payment on a home when COVID hit and all the prices for houses and their interest rates kind of skyrocketed. And so I figured I'd continue saving a little bit longer, but then lo and behold, we had my son, and between the medical bills and the new car that we had to buy, because we needed a place to put a car seat, we kind of got set back on everything. But now we're hitting it again. And the thing that kind of started all of this is that I've been an avid gamer for a very long time. And I played World of Warcraft for a good number of years, probably more than I probably should have sunk my time into that. But interestingly enough, I did learn some things about finances during that time, because towards the end of my stint in playing those games, I decided that I was going to make fictional gold. I wanted to make at least $1 million gold at that point. And funnily enough, I went into all kinds of study about how to make fake money, right? And I realized that a lot of those principles translates over to the creation of real money. And it was kind of funny because I was also reading this book called Rich Dad, Poor Dad by Robert Kiyosaki at the time. And he talks about some of the same things that I was learning about the fictional gold. And he learned what he learned by playing Monopoly with his rich dad. He says he had 2 dads. One was not actually his blood father, but he was a man that was very heavily in his life, and he was a father figure. And so what they would do is he finally figured out that it was 4 greenhouses, 1 red hotel, and that allowed him to generate the monopoly money. For me, I went through and played the auction house on the video game, and I was able to earn something like 13, 14 million gold in that game over the course of about a year. But I had a whole bunch of stuff that I was able to keep track of metrics. And one of those things that I found that was very interesting was that I spent about, I want to say around 63 million gold in order to yield a net of the 13, 14 million gold. So altogether, I generated over 80 million, but it cost me a lot. And I imagine if I were to do it again, I could be a lot more efficient than I was. But it was interesting to see those things. And I realized that as long as I found things that I could spend money on that would turn a profit, I could probably figure out how to do it in real life as well. And I understand that it's not exactly the same thing, especially since things in video games are a lot more time compressed. And so you don't need employees. You don't need a lot of those other things that are going to be required in real life. But I thought it was a good lesson nonetheless. And so in the book, Rich Dad, Poor Dad, Robert Kiyosaki talks about the 4 sources of income generation. First, you can be an employee and you receive an hourly paycheck or a salary. Second, you can run a small business. Third, you can run a big business. And fourth, you can invest your money. And the place where the most money is made is in the second 2 categories, big business and investments. It was during this time that I also realized that 90% of all millionaires that have been self-made in the United States were made through investing in real estate. And I found that to be really interesting. And some of the things that I came to understand about that is that real estate investing is investing in something that's a hard asset. It's got something physically tangible behind it, which isn't always the case with things like the stock market or even with the US dollar, because it's a fiat currency, which means it's not backed up by any kind of solid resource. It's just backed up by a promise by the US government. Another way to look at dollars, or they're just kind of promissory notes that the government hands out saying that they're good for reimbursing you if you need to call the debt due. So that kind of leads into the importance of understanding assets and liabilities and a little bit about debt. Robert Kiyosaki defines assets and liabilities a little bit differently than you'd find, say, like a dictionary. But he says that an asset is something that makes you money, and a liability is something that's constantly draining money. And so in that sense, what you have to try to figure out how to do if you're looking to invest is put your money towards assets, things that which will work for you and turn a profit. And so a lot of times when we think about debt, and this is something that I thought about debt for a very long time, is extremely something that you should avoid at all costs. And he introduced the idea that there's also good debt, and it has to do with the idea of assets and liabilities. Bad debt is going to be a debt that's constantly costing you money over the course of your monthly and your yearly time periods. But good debt is a debt that you take on that generates cash flow and actually makes you money every month. And so that can be a good debt if you're able to manage your money in such a way that the debt that you're borrowing from someone else is producing an income for you every month. So it would cover the cost of paying the payment for the debt and then also give you extra in your bank account every month. And so that actually took me a couple of years wrestling with in my mindset to come to terms with. But it's also kind of opened up the possibility of being able to structure deals and negotiating with other people when you're buying assets so that you can make them money when you purchase the asset from them. And then you can assure that the terms are favorable to you so that the asset generates money for you month to month. And so we'll go ahead and end the podcast there for today. But if you have any questions for me in the future or need anything clarified, feel free to submit your questions to YouTube. I'd like to be able to read those comments and answer them for you in future episodes. And I'd like to thank you all for tuning in. This has been the Pot of Gold podcast, where we talk about finances, wealth generation, and real estate investing. And you have a wonderful day.